Okay, as you all know, BBMA was founded by OMA from Malaysia, I think about 10 years ago. So if you guys want to check out the notes that I have that I'm using right now, it's in my website, so you can access that later on. Okay, let's move on. So tonight we'll be talking about, first of all, the most important thing in trading is decision making. So in BBMA, in order for you to come up with a good decision is basically to understand the candlesticks formation and understanding the difference between candle breaks and candle rejects. And then later on, I'm gonna just browse through the MT4 familiarization, and gonna talk about. I'm just gonna post the BBMA settings. I think everyone has already that sorted out. For those who just started learning BBMA, then just make sure that the settings that you have is the correct one. Okay, then we will move on with Bollinger Bands and moving average fundamentals. I will be talking about Bollinger Bands, the different types, and how the market moves when on each particular type of the Bollinger Bands. And then we'll talk about the functions of the MA5 and 10, the EMA 50, and then maybe we'll take a break in the middle, and after the break we'll talk about extremes. For tonight, I'm not going to talk about all the different types of extremes, but I will be talking about two very important types of extremes, which is the extremes aiming outside of the Bollinger Band and extremes during sideways, because that's really important for you during the re-entry part. Okay, so after that we'll talk about signals and setups. If we do have time, we'll talk about market structure, but however we'll be talking about multi-time frame analysis towards the end, or in between. If I see a good market, then maybe we can do a live trade instead. And then maybe towards the end, if we have some time, then we'll talk about money management. Okay. All right. So I'm just gonna go straight to this. So this is just the basics candlesticks parts. So in Forex or any other pairs that we trade on, there's two different candles: is buy and sell candle, bull or bear. But the most important things is that you know how these candles are formed. Okay, so in the next few slides we will be talking about, and I'm going to explain on how these candles are being formed and how it gives you the decision making in terms of identifying candle breaks and candle reject. Alright, so let me just go back. So the only difference between the two candles is obviously the bull candle opens from the bottom and closes at the top, and the sell candle opens at the top and closes at the bottom. Both the low and the high areas, parts of the candles are the same. Okay, so basically from candle open to candle close is the candle body, and obviously the shadow and the wick is as shown. Alright, just a quick MetaTrader for familiarization for those who just started trading. So basically what we have here at the bottom, we have X and Y axis. So you need to understand that on the bottom is the date and time, and on the right hand side is the price. So basically the candles are moving from left to right, and over time the candles are moving a long time, and obviously going up and down, changing the prices as well. But the most important thing to note on the MetaTrader is the time frames that we have here. So basically, if we have the H1 time frame, so basically the time frame H1 tells you that each of these candle is 1 hour length. So basically the candles are being formed over the period of 1 hour. So if you have M1, that's 1 minute candles, you have 5 minutes candle, and so on. Okay. Alright, so for those who are using phones, it's also the same. For iOS and Android, you have date and time, and then you have the price. You have the time frame selector on the top left corner of the phone. And for Android, you just tap on the screen, then radio functions will come out. So you can just choose, well, what are the things that you want to use. Okay. All right. So for those who just started learning BBMA, just bear with me on this one, because in BBMA we have two indicators, that is the sell and buy indicators. MA, moving average high 5, so I'm just going to call it MAHI 5 just to abbreviate it so it's much more easier for me to pronounce. So moving average high is MAHI and moving average low is MALO, just to make it simpler. Alright, so we have two set of indicators. We have sell indicators, MAHI, and we have buy indicators, MALO. Okay, so let's just say that we're looking at the H1 time frame, and we have the time and obviously the price on the right hand side. So let's just say that the price right now is, let's say, 8 in the morning, and the candle just opens at this particular price. Let's just say at $2.50. Okay, so after 50 minutes, the price went down, let's say to about $1.50. So obviously, as the price went down, the candle open area will never change its position. However, the candle color will change whenever the price went below the candle open. So if it went below, then the color of the candle will change to whatever color that you set for your sell or bear candles. Okay, so let's say another 50 minutes passed by and the price went up. Okay, so as soon as it went past over the candle open, and it changes to a buy candle again, and it leaves a trail. This is what we call a shadow wick. So the most important thing about the candle low is that we know that this is the lowest price level that the candle has been to. Okay, another 50 minutes pass by, the candle moves up again, crossing the MA high 5, MAHI 5, and MAHI 10. Let's say at about $5 price, and another 50 minutes, the candle closes at 9 p.m. So it went back down to this price level at $3.50, for example. So at 9 p.m., at 9 a.m. in this particular example, as soon as this candle closes, automatically there are two things that's going to happen. This candle is going to close and the other candle is going to open. So this is how the first candle is being formed. Let's say, for example, that the buy candle, how a buy candle is formed, that it opens at the bottom and closes at the top. Regardless where it has been, as long as the candle open is at the bottom and closes at the top, then you have a buy candle. So automatically at 9 a.m. another candle opens at the same level of where the price has closed earlier on. Okay, let's just say that at 9:15 the price went up to MA high again, MAHI, and then another 30 minutes the price went down, crossing the MA low, MALO. Alright, and then it closes at 9 a.m. So this is just a simplified version of how the candles are being formed. However, in the real market, it's going to be a lot more different. But in order for you to practice this and get your eyes familiar with the candlestick formation, it's probably best that whenever you have a free time, that you go to M1, and it's much more quicker. The candles are being formed a lot quicker in every minute, so it gives you a rough idea of how the other time frames are being formed. Okay. So we have two sets of candles here. We have the buy candle that opens at the bottom and closes at the top, and then we have the sell candle that opens at the bottom and closes at the bottom. All right. So there are two things that you need to understand with this one. So whenever a candle rejects, so this is what we call reject. So obviously the candle goes through the MA, whichever MA it is, Mahi or Malo. So it goes up and then it returns back in. So that's what we call rejection. So it tells you that the candle couldn't manage to break through this barrier, or let's just say, for example, that this is resistance. All right. So whenever you have this, whenever you have a candle that rejects MA high, that is a point of entry sell. All right. And here at the bottom we have what we call a candle break. So whenever a candle goes through a particular moving average or any lines in BBMA, because in BBMA we have about 8 lines. Okay, we have 3 set of lines for Bollinger Band, we have 4 MAs, and we have 1 EMA. So that's about 8 lines for each candles to break through and reject. So there's a lot of things to put in. However, we just need to make it simplified. First and foremost, that we just need to look at it individually. All right. So when the candle breaks, it goes through the moving average or any lines in BBMA, and it closes below it or above it. So that's a candle break. So whenever you have a candle break, that's giving you a direction. So if it breaks the buy indicators and tells you that the buyers have lost and the sellers are in, and the direction of the market is going down. So in BBMA, that is candlestick direction. Okay, and let's have a quick refresh on that. So on the top left hand side, this is what we call a candle break, buy candle break. So this is a buy candlestick direction. Okay, and then on the left, just on the right, is a sell entry. At the bottom we have a sell candlestick direction and a buy entry. So I hope you guys are familiar with this, and just keep on practicing, and you in due time you'll be able to properly identify these things in the market. Okay. All right. So I'm just gonna leave this for maybe a minute, just for you guys to double check what's the settings are. So make sure that you have the right settings. Okay. Okay. So I hope you guys make sure that you double check the settings that you have, because it's normal that most of the students that I have, they sometimes have the wrong setups. Sorry, settings. Okay, so the BBMA fundamentals. It is a very, very important thing that you need to tell yourself. Okay, so first things first is we need to make sure that both candles and both moving average are not supposed to be outside of the Bollinger Band. So whenever it's outside, then it tells you that if the MA is outside the Bollinger Band, that indicates you extreme conditions. If the candle sits outside of the Bollinger Band, then it tells you that it's probably a momentum that indicates market strength, or probably an extreme. So you need to be able to identify these things. However, you have to understand that any of the moving average or any of the candles, if they are outside of the Bollinger Band, the market will try to push it back in. So when it goes back into Bollinger Band, then you will create a re-entry. So we'll talk about that later on. Okay. So Bollinger Bands, there's three lines, obviously top BB, mid BB, and low BB. All right. So it acts like a dynamic support and resistance. If you just want to make it simpler, it's just a highway or a path for the candles to move into. However, sometimes in extreme conditions, the moving averages are going outside, and also the candles are outside the Bollinger Band. So when these things happen, we know that it tells us a story. So we need to be able to understand what the market is trying to tell us and come up with a plan and how we're gonna enter the market. Okay. So I'm not gonna go with this. It's just straightforward that it tells you that top and low BB. It tells you that if the market is at low BB, indicates the market going upwards or going downwards. It also tells you that if there's a candlestick momentum, there's a strength of the market. So I'll be talking about this in the next few slides. Mid BB is different, is a much more important part of the Bollinger Band because it tells you the direction of where the market is going. All right. So it divides you between the buy and sell zone, and any candles that goes through the middle BB, it tells you that there's a potential of the market going to the other to the top or low BB. Okay, so it's very important that you understand this concept. Okay, so there are two types of Bollinger Band. Obviously, first is sideways Bollinger Band. So during sideways Bollinger Band, before we even talk about this, we need to understand how do we define and how do we identify the sideways Bollinger Band. So the market is not as perfect as this illustration that I have in front of you. The market is quite dynamic and is not as nice as this in a straight line. So how do we actually know if the Bollinger Band is sideways? So in my point of view, that as long as the top and low BB are pointing to the same direction, then that is a good indication that the market is correction, the Bollinger Band is sideways. All right. So in here we have the market going sideways. So top and low are pointing to the same direction. All right. So what if the market is going up like that and the Bollinger Band is like that? So this is still sideways. Even though it's going up, it's still a sideways Bollinger Band. And let's just say that it's going down like that, it's still a sideways Bollinger Band. So these are the things that you need to really understand. Okay, so one thing to note during the sideways Bollinger Band that every time the candle break and reject, again, that's the main reason why we talk about candlestick formation and the difference between candle break and reject. During sideways Bollinger Band, every time the candle break or a candle reject, for this example, let's say, the market will try to go back to middle BB. It doesn't go straight to middle BB. It has other moving averages or other lines in Bollinger Bands, other lines in BBMA to break in order to go to the mid BB. All right. Let's just say over here, for example, that the candle break on the top, and obviously you have the reverse candle is going to go to middle BB. However, it took a while until it goes to middle BB because let's just say, for example, that it was trying to break MA low. Okay, so as long as it doesn't break MA low, it's not going to go down. So those are the things that we really need to understand when it comes to these fundamentals. All right. So over here we have candle reject. So whenever candle break or candle reject, the market's going to go back to middle BB. All right. So I'm just going to go to the charts just to have a quick. Okay. Let's just close this one up. Okay. Let me find a good market for you guys. Alright, so That looks good. So, all right. So just bear with me in this one. While we're doing this, looks like we have a good signal over here. Okay, so let me just share the screen for you guys. Okay, can you guys see this? Can everyone see the screen? Okay, so just a quick one. So we have a potential re-entry here at G. Let's just check. All right. Okay. So let's just wait for that. In the meantime, let's talk about the blinker bands. All right. So we have two different types of blinker band. So obviously the sideways and momentum blinker band. All right. So as you can see over here, this is good example that we have a sideways blinker band over here, and then we have a momentum blinker band over here. Okay, so this is very important for you guys to identify. So during sideways blinker band, if a candle breaks or rejects, the market is going to go back to middle BB. So as you can see over here, it's a very good example that the candle break on the top, and you have a reverse, then you have a retest, and then you go back to middle BB. All right. So we'll talk about extremes later on, but however, this is how the market. So it took. This is a 1 hour time frame. So obviously from the first candle over here. So if you can see the blinker band is over there. So you know that this candle is too far away from the blinker band. So this tells you that if you go back to the notes earlier on, the fundamentals of BBMA, that if there's a candle that's outside of the blinker band or MA outside the blinker band, that's an extreme condition. So it has to go back inside. So this is what happens over here. So that's the first. This is a candle break. It goes back to middle BB. Then you have a candle reject. It goes back to middle BB. So what you need to understand about middle BB is that it divides the buy zone and the sell zone. All right. So what we need to understand about is if there's the candle from the top going down the bottom, as long as there's no candle that breaks the middle BB, the candle wouldn't be able to go through low BB. So over here, it's been a few hours until there's a candle that managed to break through the middle BB. So it made a retracement after that to create a re-entry, and then it goes back down to low BB. As soon as this candle that breaks through the middle BB, obviously it's going to go to low BB. And now, for example, over here, as soon as it managed to reject low BB, it goes back to middle BB. So that is the concept of this one. However, as we know that this is a downtrend market. Hang on, let me just close this one, and I'm gonna close all the videos. So please guys, make sure that you close your your webcams and other stuff. Okay. All right. So is everyone clear with sideways blinker band? So let's just go back to the notes earlier on. So that's a good example there at GU. We have a candle break and a candle reject. Okay. So now let's talk about the second type of um, blinker band. So now we have a momentum blinker band. So momentum blinker band is very obvious to identify. It's much more harder to identify sideways blinker band, but it's a lot easier to identify momentum blinker band because top and low of the blinker band is pointing away from each other. Okay, as you can see on the illustration. Okay, so whenever you have a momentum blinker band, it tells you that there's a significant market strength going upwards or going downwards. Okay, and the most important thing that you need to understand when it comes to candlestick momentum is that every first candlestick momentum will create a re-entry. Okay, so what is a candlestick momentum? A candlestick momentum, by definition, is the candle that closed outside of the momentum blinker band. So over here at the top BB, you have a buy candle. So a buy candle, as we go back again from the early when we talk about candlestick formation, the candle opens at the bottom and closes at the top. So the close part of the candle is outside of the blinker band. Okay, so there you go. So even here at the bottom, we have a sell candle that opens at the top and closes at the bottom. So the close part is outside of the blinker band. All right, so let me go through with that. So we have a momentum blinker band over here. Okay, so top and low BB are open. So this is your first momentum. So every first momentum will create a re-entry. So over here, the candle is too far away from the blinker band. So obviously, the market tries to go sideways because whenever it goes sideways, you have to understand that it's creating a re-entry. Okay, so this is what's happening right now. So if we put BBMA over here, so now the market is creating a re-entry sell at H1. Okay, so that is what's happening. All right, so we missed that entry over there. All right, we'll look for another entry later on. Don't worry about that. So that is very important thing when it comes to identifying type of blinker bands. Okay, so let me just go through again, just revise a little bit on sideways and momentum blinker band. So obviously at this particular part of the blinker band, although it's moving in a regular pattern, but this blinker band is sideways because top and low are pointing towards the same direction. Even over here, even though it's going up, but top and low are pointing towards the same direction. So it's more or less a sideways blinker band. However, over here, there's a significant um, change of direction in the blinker band. So you know that top and bottom are wide open. So this is a momentum blinker band. Alright. So I hope that this is clear. So let's move on. Okay. So again, when we talk about the types of blinker band, the most important thing that we need to know when it comes to sideways blinker band, that if a time frame goes sideways, it indicates to you, it tells you that it's creating a re-entry on a higher time frame. So this is very important for you to understand. Okay, so usually depending on the length of the sideways and depending depending on the length of the momentum the sideways BB, then it will dictate the strengths of the market movement later on. So basically during the sideways, it's creating a re-entry on a higher time frame, and as soon as that re-entry is completed, then obviously it went down on this manner. So there's a big movement of the market as soon as the formation of the re-entry candle is completed. Okay. All right, I think we'll take a quick 10 minutes break. So if there's any questions, you just keep it until the end. We'll talk about it later. Okay? Um, let's start again. So back to the class. Let's talk about the moving averages. So moving averages, MA5, he has two functions. The first one is to detect extreme. Detecting extremes means that the MA is outside of the Blinker band, as shown over here. So you have extreme cell at the top, and also you have extreme cell buy at the bottom. Correction, extreme buy at the bottom. The other function of the MA5 is the early point of entry. So basically, we already talked about this earlier on, that every time the candle rejects Mahi 5 or Malo 5, that's an early point of entry for sell or buy. So as you can see over here, the market rejects Mahi 5, so this is an early sell, and as well over here. So this is an early re-entry sell. Okay, so when we have correction, so now we talk about the moving average 10. Let me just fix this thing so people. This sound is coming from the people going in and out of the lecture. So just bear with that. All right. So continuing on. So when we talk about MA10, the function of MA10 is to give us a more robust reentry, so it's much more stronger. So over here we have an example that when the candle rejects both MA MAI 5 and 10, so that's a much more stronger reentry. Over here as well, you have both Malo 5 and 10 being rejected, so that's a much more stronger reentry. Okay. Alright, so I'm gonna go through this in the chart, so it's much more easier. Okay. So let's go through let's go for maybe UJ. Okay, so over here in UJ, I'm just gonna delete some of this stuff. Okay, so we're just gonna talk about the moving averages. All right, so let's delete the blinker bands for now. So okay, if we delete the blinker bands, as you can see that all of the candles are moving, you know, in between Mahi 5, correction, the Mahi and Malo. So if you can see, the market is traveling from Mahi and Malo. So that's how the market is trying to move. Okay, but there's another way that I use to actually, for me to be able to know whether the market is going sideways, if the blinker band is going sideways or is going momentum blinker band. All right. So during sideways Bollinger Band, we need to understand that the candles are traveling from Mahi to Malo. Alright, so when you see this one over here, so this part over here, this is sideways Bollinger Band because of the candles are moving from Mahi to Malo, Malo to Mahi, Mahi to Malo. So I know for a fact that this is a sideways Bollinger Band. Alright, so over in this part, okay, over at this part, I know for the fact that this particular part of the area is a momentum blinker band because now the moving averages is following the candles, so it's going up. So we know there's a momentum over there. And again over here, although it's going downwards, it's still a sideways blinker band until to this point. Alright, so this is still a sideways blinker band because the market is moving from Mahi to Malo, Malo to Mahi. So that's how I define the blink event. All right. So let me just go back to that example just now. So as you can see, we know that there's a sideways blink event over here, and there's a particular momentum just over here. All right. So let's talk about the moving averages earlier on. So the function of MA5, regardless is Malo or Mahi 5, is a point of entry sell for Mahi and point of entry buy for Malo. So that's really important for us to know. Okay. So let's just say over here we have a candlestick momentum sell. Then obviously when the market rejects Mahi 5, that's an early point of entry sell. So that's really important for you all to understand. Okay? And when you have a re-entry that is being rejected by both Mahi 5 and 10, so that's much more stronger re-entry, as you can see over here. So this market over here, we have the candle rejecting Mahi 5 and Mahi 10. Alright? So if this is unclear, there's also another indication over here for those people who understand candlesticks formation. So we have a reversal indicator over here, which is a doji over there. So that's an early signal that tells you that there's a potential market reversal at that particular point. All right, but over here, this is a robust re-entry. It's a much more stronger re-entry. Okay. All right. So let me go through again. So when you have the candle rejecting Malo, that's a re-entry buy. When you have the candle rejecting Mahi, that's a re-entry sell. All right. So when the candle breaks the moving averages, then it tells you that there's a direction. For example, over here. So this candle breaks Malo 5 and 10, so it tells you that the market is going down. All right. As soon as you have this direction, then the market retraces back to the Mahi. So this is a re-entry sell. So this is a point of re-entry. So you know that the market is going down. All right. Okay. So let's go back to. Okay. So hang on. Let's go back to the notes. So this is a very important piece of BBMA. It tells you the trend. Whenever I teach my friends about BBMA, it's very important for everyone to understand that in BBMA there are two different types of trend. One is the current trend and one is the major trend. When I talk about major trend, I'm talking about the trend in monthly, weekly, and daily. And when I talk about the current trend, that is H4, H1, and M15. So we need to be able to understand the trend in both of this area of the market, because we need to understand which particular time frame we're going into and what particular setup are we trying to go into. So it's really important what is the trend on major trend and current trend, what type of setup are we going into, and based on that setup we know that this is a different type of trading style. So when you are entering a setup on a monthly time frame or monthly, weekly, or daily, then you know that this trading style will be based on a swing particular type of trading style. So you'll be entering the market on a longer period of time. So your market projection or TP projection should be more than 100 pips and above. Okay. So when we go to intraday, that will be on H4, H1, M15. And if you guys are going to do scalping, then you're going to focus on H1, M15, and M5. So these are the fundamentals that you really need to understand when it comes to identifying trends. Okay? So in BBMA, the EMA 50 is probably the most strongest line that we have because it tells you exactly where the market is going. So whenever the EMA is above mid BB, then it tells you that that's a downtrend. And whenever the market correction, the EMA 50 is below the mid BB, whenever it crosses mid BB, it tells you that the start of an uptrend. So we need to be very vigilant in terms of identifying these trends, especially on identifying the setups. Okay. So before we move on to that, let me just have a quick um, all right. Okay. So over here, it tells you that, let's just go to monthly first. All right. So on the monthly, it tells us that the that this is an uptrend market because the EMA 50 is below mid BB. All right. Weekly is above mid BB, so there's a contrast between the trend between monthly and weekly. Okay. And another one, when we go to daily, so there's daily is still an uptrend. So when you have monthly an uptrend, weekly is downtrend, and daily is uptrend. So there's a little bit of confusing part on this one. However, you need to understand that, let's just say, for example, over here, when you look at weekly, that we need to be able to project the market. So let's just say, for argument's sake, that I'm just saying that, at some point that the EMA 50 will be crossing mid BB at some point, and maybe in 2-3 weeks time. So, and that will be a crossing of the EMA 50, and the trend will be changing again. So it all depends on what happens on the lower time frame and what it has in still. Okay. So based on this analysis, I would say that monthly, weekly, and daily is still an uptrend, although that EMA 50 is above mid BB over here, but there's a potential of crossing over here, and the market is still going up. So I would say that overall, on a major trend, UJ is on an uptrend market. So when we check H4, H1, and M15, that will be going to the current trend. So let me just delete this stuff. All right. So on a current trend, H4, we have a crossing of EMA 50 over here. It tells us that sell market has just started in H4. We'll check in H1 as well. There's a sell market as well, so downtrend, and then 15 downtrend. So if you're trading right now on a daily basis, let's say for example you're scalping or intraday today, then it's probably a lot safer if you sell UJ because of the current trend. Okay. And what is really important when it comes to EMA 50, as I said before, that usually when this is just a giveaway, all right? I'm just gonna tell you something this is how I identify my setups. Okay. So in M15, I know that over here we have the EMA 50 going outside of the blinker band. All right. So every time there's a moving average or a candle going outside of the blinker band, there's a story behind it. We need to understand what it's trying to tell us. Okay. So whenever EMA 50 or any other candle or any other MA is outside the blinker band, the candles is going to go sideways. Alright, so if it goes sideways, for this instance over here, if it goes sideways, then it tells you that the market is retracing to create a re-entry. So over here, if M15 is creating a re-entry, I know for a fact that this is creating a re-entry on H1. Okay, so usually I teach this on most of my friends and most of my students, so we know that every time at particular time frame it's outside of the AMA, outside of the blinker band, we know there's a re-entry on a particular time frame. So For this example, we know that this is a re-entry sell on H1. Okay, so we know that this is the pinnacle of the entry for H1. So we will always be aiming to sell at this particular area. So if you go here in H1, so this is what it has in H1. Okay, so it tells you where exactly the re-entry is going to happen. All right, so let's have a test again. All right, so over here the EMA 50 is below mid BB, so I know that it's uptrend, and the EMA 50 is outside of the Ringer band. So whenever these things happen, I know that it is creating a re-entry buy at H1. So let's just see. Okay, so over here, as you can see, that it has created a re-entry buy in H1. So it's pretty obvious when it comes to finding setups. Okay. So on another example, okay, EMA 50 is outside over here, and we know this is downtrend. So it's pretty much straightforward. I know that this is a re-entry. This is a H1 time frame, so I know that this is a re-entry sell on H4. Okay, so over here, this is where the re-entry is happening. So it gives you an indication of where the re-entry is happening, and it also gives you a zone or an area for you to sell. However, there's a lot of things that you need to understand when it comes to multi-time frame analysis later on. I'll talk about that. All right. So let's move on with the notes. Otherwise, we're gonna run out of time. Okay. So let's move on to the next part. So let's talk about extreme. Okay. Hang on. Let me just get a quick sip of my cup of coffee. So when we talk about extreme, I'm talking about extreme MA is outside of the blingy band. So this is just the generic extreme. Okay. So when the MA is outside of the blingy band, that is extreme. Okay. So by definition, this is just based on my own perspectives. So when you have extreme, it tells you that this is a signal that indicates to you that there's a potential market reversal. So whenever you have MA outside of the blinker band, so we know that the market is trying to reverse. Okay, so why is gonna go? Why is it gonna go the other way? Because perhaps it's gonna go sideways, or if you remember the fundamentals of BBMA, the MA and the candle shouldn't be outside of the Bollinger Band. If they're outside, that's abnormal for the Bollinger Band. So the Bollinger Band, correction, when the MA or the candles are outside the Bollinger Band, the market will try to move it sideways in order for it to go back inside the Bollinger Band. So when this happens, as soon as you know that there's a sideways, then you know that there's a re-entry happening. Okay. All right. So that's the definition of it, and that's how you need to that's the perception that you need to tell yourself, because every time you have an extreme, it doesn't tell you that it's going to go reverse immediately. That is only a signal. All right. So what are the characteristics of extreme? So there are 4. Okay. So first of all, you need to have MA outside of the Bollinger Band. So it's either top or low. Then you need to make sure that there's a reverse candle. So as soon as you have a reverse candle, then you know there's a potential of market reversal. Okay, as you can see over here in the example, you have the MA outside going outside over here, and then you have a reversal candle over here. As soon as you have the reverse candle, you have to mark the highest body, and you need to wait for the retest. As soon as you see the retest, that's where you're supposed to be entering the market for that reversal. However, you need to take your profit at the mandatory take profit, which is MA5, MALO 5, MALO 10, or mid BB. But for me, I always take the safest one. I'm gonna go for MA5 because I'd rather be safe than sorry. Because we call it mandatory take profit because of this. All right. For this example, this is extreme sell. Extreme sell tells me that there's a potential of market reversal, but we don't know. There's no confirmation yet. The confirmation for extreme is MLV. That is really important for you to understand. After an extreme, if there's an MLV, that confirms that signal. All right. So over here, if you didn't take your profit, then obviously it becomes a re-entry buy for this CSM. So if you look at it in a buy perspective, then you have a CSM. This is a re-entry buy. If you look at it in a sell perspective, you have extreme. This is TP wajib or mandatory take profit. So these are the things that you really need to incorporate and understanding the basic fundamentals of extreme. Okay. So in my understanding and my own experience, by actually understanding and really knowing the fundamentals of extreme, it will give you much confidence in terms of going to entries, because when you understand how extremes work, then it'll be a lot easier and a lot more you will have a lot more confidence in your entry, because most people have a lot of doubts in their entries because they don't understand the concept of extremes. Okay, so we need to incorporate the re-entry setup with the extreme setups the extreme signals in the lower time frame. So we'll talk about this in multi-time frame later on. So let's check the market for any extremes. Okay. All right. So okay, let me find an extreme over here. All right. So this is a good example of extreme. So you have two different types of extreme over here. You have extreme MA outside, and you have a sideways BB extreme over here. So the MA outside of extreme over here, so that's the first signal, the first characteristics. Then you have the reverse candle over here. As soon as you have the reverse candle, you mark the highest body. Okay, so you need to wait for the retest. So this is the retest over here. Then that is the TP wajib, the mandatory take profit, because this is a downtrend. If I add correction, where is it? Moving average 50 exponential close. All right. So this is an uptrend. We know that this is an uptrend, and every time the candles reject Malo, you know that this is a re-entry buy. So it's a lot safer that we take the mandatory take profit over here. All right. If you have seen just now, when it comes to learning BBMA, we need to understand that BBMA is telling you exactly where the market is heading, because both Bollinger Band and moving averages are in the same category under the trend category. So you really need to understand that it tells you the trend of the market. So it's really important that you understand this concept. Okay. All right. So another extreme over here. So this is for you guys. This is a very good example of double extreme. You have an extreme on momentum BB. Okay, extreme MA outside of the Bollinger Band on momentum BB, followed by extreme on sideways Bollinger Band. So this is a very good example of double extreme. All right. So usually double extreme, your mandatory take profit is at the other side of the Bollinger Band, so it's going to be in lower BB. Okay. So over here it's the same thing. MA outside, you have reverse. Okay. So your MA outside over here, and this candle is the reverse, and this is the retest. Okay. As soon as you have the retest, that's the point of entry sell, and obviously the TP wajib for this one is at the other side of the Bollinger Band. All right. But if you want to be safer, you're going to go to mid BB. That's still good enough. All right. So that's how you identify and break down the extremes. All right. So okay, let's move on. So in BBMA O'Malley, he has identified that there's 4 different types of extremes. So obviously the extremes during sideways finger band. The other one is extremes during momentum BB. The third one is extremes with momentum. And the fourth one is extremes with momentum. For beginners, I would highly suggest that you um, you just focus on these 2 particular type of extremes. All right. The first is extreme MA outside of momentum linear band. All right. The second one is sideways BB extreme. That is already enough for you to be able to entry the market with a much more safer entry and with correction. It will be a lot easier if you make it simpler for you. Okay, because when you have too much information and you want to digest everything up, it's going to be really, really hard for anybody to do that. So for beginners, I would highly suggest that you master, let's say for example that the extreme, you master extreme first, and then you go to MLB, then you go to reentry. So you need to do it stage by stage. So at least you are able to understand fully each of these particular setups and signals. All right. Okay, so let me just go back to our notes. Okay, so in BBMA there are 4 signals and there are 2 particular type of setups. Signals is candlestick momentum. I already talked about this. So whenever you have a candlestick momentum, it tells you that it is the candle that closes outside of the momentum linear band. So identifying momentum linear band, we know that top and low BB are pointing away from each other. Okay, so that's a momentum linear band. So every time a candle close outside, that's candlestick momentum. So whenever you have a candlestick momentum, it is a signal. What does it tell you? It tells you that there is a market strength. So if it's a CSM sell, then it tells you that the market is going down. So you know that the strength is going down. And the most important thing that you need to understand about this is it's going down and it's gonna give you a re-entry. So every first CSM will create a re-entry. This is the most important thing that you need to understand. And I need you to write this down and I need you to remember this. Okay? The most safest re-entry that is available in BBMA is the re-entry after CSM. So please, please, I need you to learn this by heart. If you want to grow, if you want to do this, if you want to be a full-time trader, if you want to be a professional trader, if you are going to use BBMA, I highly suggest that you focus on learning the re-entry after CSM. I'll talk about that later on. Okay? So other signals is early candlestick directions. Obviously, when you have MLB, so after MLB, if the candle break malo, then that's the early candlestick direction. And if the candle breaks malo 5, malo 10, and middle BB, then that's the candlestick direction. So that confirms the movement of market going down to low BB. All right, so we know that. So after CSD, sometimes the market retraces back up, so that gives you the re-entry after CSD. Okay, so re-entry, there's 3 different types of re-entry. The first re-entry is the re-entry after CSD, all right? Then second one is the re-entry after CSM, and the third one is re-entry at mid-BB. So we'll talk about that later on. I'll show you some of the examples, okay? And obviously, I talk about extreme signals, so it's really important for you to understand how extreme works. And now we'll talk about MLB and re-entry. Okay. So MLV, also known as market MHV, market long volume in Malay. So you really need to understand how this concept works. Okay. So here is a good example of extreme. All right. So we have extreme MA outside of the bringer band. You have reverse. So you mark the highest body, and this is the retest. So after retest candle, then you have TP wajib or mandatory take profit at MA low or Malo 5, Malo 10, or mid BB. Again, the safest is going to be at Malo 5. After mandatory take profit, the market went back up, all right, and it didn't manage to break top BB. So this is the second characteristics of MLB. First, you need to have an extreme, and after TP wajib, after mandatory take profit, there's a candle that couldn't break the Bollinger Band. So if it's going up as a candle that couldn't break top BB, and then the third characteristic is the reverse candle. So another giveaway on this one that we know the market has lost its volume is when you have the blinker band at the top is already arching. So you know that it is going down already, that it has lost its momentum going up. So that's another giveaway over there. Okay. As soon as you have candlestick that couldn't break BB and you have a reverse candle immediately after that candle, then you need to mark the highest body, because you need to find out, you need to wait until there is a retest to complete the MLV setup. Okay. So over here at this example, after the third characteristics of MLV, the market went down. You have CSD, you have re-entry. After CSM, you have re-entry, and then after that, it goes on. Okay. However, this is the exact same market that happened earlier on. So you have extreme mandatory take profit, the MLV happening here, but we're waiting, marking the highest body, we're waiting for the retest. And obviously, if this is H1, it takes a lot of days until there's a retest. So it's very important for you that every time you have a marking highest body, you do not delete that, because it will tell you, um, it will give you an indication that if there is a retest candle for MLV. That's why it's most of the traders out there, they always tell you to look left, because history will always give you an indication of where the market is going to go. All right. So over here, this is the third correction. This is the MLB, and it's just waiting for the retest. So the retest happens over here. So as you can see, this is a good example of an MLV. Sometimes, if you're lucky, the retest might be at this particular area. But in this example, I just took this example just to give you that it is very important for you to make sure that your marking highest body is always there. All right. Okay. So before we move on to multi-time frame analysis, I think let me take a quick 5 minutes or 10 minutes break before we go into that. All right. Okay. Let me just go back to that. All right. Okay. 5-10 minutes break, and we'll talk about multi-time frame analysis. Okay, let's continue. All right, so let me just delete this one. Is everybody? Can you hear me? Okay, so let's talk about multi-time frame analysis. So I'm just gonna be quick about this one. All right. So when we do multi-time frame analysis, we need to be able to first find out the trend. Second, define the type of link band. Third, we need to identify the signals and setups that is available on each particular time frame. And then the fourth one is obviously to pinpoint the point of entry. So this is very important, all right? So I need you guys to write this down because I'm not going to point it out again. So first, you need to identify the trend. So there are two trends. One is the major trend and the other one is current trend. Second one is you need to identify what particular type of Bollinger Band it is, because based on the type of Bollinger Band, then you will understand how the market is moving. All right. Then the third one is you need to identify the signals and setup that is available on that particular time frame. And the fourth one is finally identifying the point of entry. All right. So over here is a good example of a re-entry. Okay. So this is a re-entry after CSD. Okay. So in GBP weekly, on the time frame weekly, we have an extreme and we have a candlestick direction, and after that, the market retraces back to MA high. So during the retrace, then we understand that this is a re-entry sell. Okay. However, in order to detect this re-entry sell, we need to be able to identify what is happening on daily and obviously H4. So we need to identify two lower time frames to make sure that it is telling you the same thing as what weekly is telling. So if the re-entry is weekly, then daily and H4 is daily is the second time frame, H4 is the third time frame. So what you need to identify is that in daily, the second time frame at least must have an extreme. So if it's re-entry sell in weekly, then daily must have an extreme sell. All right. So in H4, we need to be able to have at least an extreme or an MLV. So on these two. So if you have three time frames pointing to the same direction, then it is much more easier and much more safer for us to entry the re-entry. Okay, so this is what we need to really understand when it on the basics of the re-entry. Okay, so I think somebody have asked earlier on about CJ. All right, so we'll talk about CAD JPY. Okay, so CAD JPY, let me just do a quick analysis. So basically, I'm just going to go for monthly first. So on a monthly time frame, I will look that EMA 50 is above mid BB, so this is a downtrend. And second one is I'm going to look at the type of Bollinger Band. So Bollinger Band is sideways. So during sideways Bollinger Band, we know that if the candle breaks mid BB, then it's going to go for lower BB. So I know for a fact that it's probably going to go for lower BB. And the third one is obviously we need to look for signals and setup. Signals and setup that we have here is we have extreme sideways BB, candle reject, it goes to middle BB. And then we have candlestick direction, we have re-entry. So there's a potential of market going here. Okay, so we know the market is going down on a monthly time frame. Okay, so we go to weekly. Obviously, the trend is still the same. It's a downtrend because MA50 is above BB. We have sideways Bollinger Band, and we have an extreme on sideways BB. Candle rejects stop BB, so that's an extreme over there. All right, and on daily, however, has a different trend because MA 50 is below mid BB and it's an uptrend. However, we have signals and setup that we have over here is that the candle has already break through mid BB and has a potential of going to low BB, and we don't have any candlestick momentum, so we have MLV and daily. All right. So now we move on to the lower time frame for the current trend. So the current trend, there's a potential of confirmation of downtrend in H4 because in a few hours time we know that the next few candles the MA 50 is going to cross over mid BB, so we know that's a potential of confirmation of downtrend. And this is a momentum BB because top and low are opening. Okay, so we know this is a momentum BB. All right. So every time there is momentum, candlestick momentum, we know that there is going to be a re-entry. Okay, let me just delete this. So we know that there's a potential re-entry in H4. All right. So that is the zone for the re-entry in H4. So signals and setup that we have extreme, we have MLV. So basically we need to mark this. So we have extreme, all right. We have TPYJ, we have candle that couldn't break BB, reverse, and then we have CSD over here. We have re-entry after CSD. It went down here, it went back up, another extreme over here, sideways BB. Then you have CSM. After CSM, then obviously that is a signal for us that tells us that there's a strength in the market going down. And obviously every first CSM will create a re-entry. Okay? So over here, as you can see, this candle is too far away from the blinker band. So obviously the candle needs to move sideways in order for it to go inside the blinker band. So that's why the candles are going slowly sideways back inside the blinker band. And also there's also potential of re-entry at H4, but it's not confirmed yet. All right. So we go to H1. The market is also downtrend. The type of blinker band is currently momentum blinker band, and we have a CSM and we have a re-entry zone over here. All right. So we also have a re-entry cell on H1. Okay. So we need to confirm that this re-entry is happening over here. So if we look at M15, obviously as per the example that I told you earlier on, there's an extreme, the EMA 50 outside, and you have this extreme at top BB. So this is a re-entry cell for H1. Alright? So there's an extreme. So basically now we have a re-entry in H1, re-entry after CSM. Then the second time frame will be M15. So you have an extreme at top BB, and you also have the confirmation of EMA 50. Alright? And an M5, you have an MHB. So this confirms you that 3 time frames is telling you that the market is going down. And needless to say that we know that from monthly down to the very lowest time frame, we know that this is a downtrend market. So it is very, very good example for you to entry this market. So if I were you, I will do a entry at this market for sell. Okay. All right. So unfortunately, I think I just checked the chat. I've been talking to myself for a while. Oh my goodness. All right. Okay, my bad. All right. Oh my goodness, I have to do this again. I need to go to sleep. What the fuck? Anyways, let me take another coffee. Oh my goodness, I was like talking to myself. All right. Again, take 2. So, just give me a quick few minutes here. Just gonna check on some stuff. Um, my goodness, that was insane. All right. All right. Okay, so again, let's start from the friggin' beginning. Okay? So first of all, we need to make sure, number one, you are going to check for the trend. So there's two trends, major trend and current trend. So we'll start from monthly. So although you are scalper or intraday or swing trader, regardless of that, you need to be able to do your analysis from monthly to the lowest time frame. That is really important. You don't start from M5 to monthly. You start from monthly to M5. That's really important. All right. So first of all, we need to identify the trend on monthly. So MA50 is above BB. That's a confirmation. And all right. So we know that this is a downtrend market, and we need to identify the type of blinker band. So a sideways blinker band. And the third one is we need to identify the signals and setup that we have in this time frame. So we have extreme sideways blinker band. So the candle reject at the top BB, and then it goes back to middle BB. As soon as it breaks middle BB, then we know that this is a candlestick direction. After candlestick directions, we have re-entry at middle BB. So we know the potential of the market is going down to low BB. All right. So for those who have who understand Nike chart, so obviously you have this is just a freebie. You have a bullish engulfing over here. So obviously you need to have a correction. Okay, you have a retest on the bullish engulfing setup over here. So obviously when you look at this, the market's going there to retest that area. Okay, so that's just a quick analysis of the monthly. So now we go down to weekly. We know, first of all, one, we need to find the trend. So the trend is still downtrend, MA50 about BB. This is number two, sideways BB, and you have an extreme rejecting the top BB. So that's a confirmation. So signals and setup, you have an extreme over there. Then we go to daily. Daily is a bit different because EMA 50 is below mid BB. This is an uptrend market. However, this uptrend market, we know that you have an extreme at the top over here, and the candle has broke through the middle BB. So the target of this market is probably at low BB. All right. So that's it for daily. On H4, there's a potential of confirmation of the market going downwards. So we know for a fact that monthly, weekly, and daily are downtrend, regardless of the daily EMA 50 at below mid BB, because over here, as we can see at the top of daily, we don't have any momentum, so it's MLV. All right. So we go to looking for the current trend. So obviously, when you do your analysis, you need to be able to project the market. You need to have some sort of what do you call this, projection. So this is just my projection that after a few hours, the blinker band is just going to go down, and obviously EMA 50 will be crossing over the mid BB at some point. And we need to be able to identify the type of blinker band. So this is also a downtrend market. Type of blinker band is momentum blinker band. And obviously you have a momentum here. So when you have a momentum, you know that there is a market trend going downwards, and every first CSM will have a re-entry. Okay? So over here we know that there's a potential re-entry at H4 because of the CSM. However, if you can see, this candle over here is too far away from the blinker band. All right. So when you see this, the candle is too far away from the blinker band, then you know what the market will try to do is going to go sideways. So when it goes sideways, it will create a re-entry. So it's going to go sideways, go back inside the blinker band. So once it's inside the blinker band, it has more room to go down to. All right. So that is creating a re-entry. So basically, if it's not creating a re-entry in H4, then obviously the next target will be in H1. Alright? So the re-entry is happening here in H1 as we speak because of there's a CSM over here. So candlestick momentum, you have a re-entry at the MA high retest. So how do we confirm this is a re-entry over here is we check on the second time frame of that re-entry. As I told you earlier on that if there's EMA 50 outside of the linear band, then obviously the market is going to go sideways to create that re-entry on H1. And when you have extreme at this particular time frame, then you know that this is a point at which you should be entering sell. So when you do enter sell here, you are at the pinnacle of that re-entry. Okay? So for this example, let's just say that you have entered the market over here at the retest, then you are exactly at the pinnacle of that re-entry. Okay? Okay, so on the first, so when you know that the re-entry is in H1, this is the first time frame. The second time frame will be M15, so you have an extreme at top BB. Alright? And the third time frame for confirmation, you have an MHB. Alright? So you have extreme, you have an MLB over here. So that is a confirmation that's telling you the market's going down. So if you have three time frames telling you the market's going down, then obviously you are in good hands, at which you just, the only thing that is going that you're only gonna lose money on this particular market when you don't take care of your margin. So you need to be able to identify and calculate your margin when it comes to entering the market. So I think we would be talking about that after this in a few minutes about money management. All right. So I think that's it for multi-time frame analysis. I need you guys to look it up. But the most important thing that I can give you guys tonight is obviously the re-entry that I always find is the re-entry after CSM, because that is 80 to 90% success rate in the market. As you can see over here, you have a first momentum, then obviously this is the re-entry. So this is re-entry, although it takes few hours until it goes down, but you know that is a confirmed pips over there. Then you have another momentum again, then you'll get another re-entry. So what you need to do now is to practice back test and also forward test. It's really important that when you have the system, you have the setup, you know how to identify the setup, then you need to be able to test it so that you can build your confidence on the particular setup, because by building this confidence, then you will gain consistency. All right. So I think that's it for multi-time frame analysis. Okay. Okay. So give me a few minutes over here. Let me just find the files for the money management. Okay, let's talk about money management. Let me just share this. All right. So, regardless of how long you have been trading, regardless of what you're doing, but when you started trading forex, you need to be able to tell yourself that you're not doing this as a hobby, you're not doing this for fun, but you're doing this um, as a source of your income, and hoping that one day that you'll be um, fully doing this full time. So if you are that particular person that you want to do this full time and you wanna achieve financial freedom through forex, then you need to be able to have some sort of plan, because you need to treat forex trading as a business. Regardless of what particular business that you are doing, it is really important that you do this, the planning. Hang on, let me just give me a sec here. Just replying some. Okay, hang on. The money management again. As I said, um, when regardless of how long you have been trading, regardless you're new, regardless of what particular technique that you're using, but it is really, really imperative. It's really, really important that you have some sort of a plan, because when you do forex trading, you need to have some sort of a business plan, because you need to treat this as a business. So if you're a person that you're you shouldn't be treating this as a hobby or other a pastime stuff, but most of the people who are learning, or most of you guys who have joined me tonight, is probably looking for a way to generate extra income, or probably become a full-time trader one day. So I really, really need you to listen carefully on this particular part, because whatever I have taught you with regards to BBMA, the technique itself is only 10 to 20% of your success in trading. 80% of your success is on money management, because without money management, regardless how good you are in your entries, but if you don't have any plans, then obviously you're gonna fail at some point. So it's not good that you win trades and then you lose, you win trades and you lose. At the end of the day, you don't have anything. You always redeposit, and it's a bad habit. So you need to make sure that you properly plan your goals. So when I first started a year ago, I only started with 10 USD as a capital. So I was telling myself that if I want to grow this money, then I need to have some sort of a plan. So let's just say that most people, in an average, that you guys started with $100. All right. So in $100, you need to be able to project in a month time that what is your monthly target. So let's just say that in a month time you want to grow this account by 20%. So you need to set yourself a goal that you'll be able to achieve, because don't set yourself up for a target that is that you yourself don't believe that you can do it. So set yourself up with an achievable goal. All right. Let's just say that we're going for a weekly target. daily target and monthly target, 3 monthly targets, and then a yearly target. So you need to be able to project those stuff. All right. So let's just say, for argument's sake, that I have $100 in my bank, all right, in my account, and I want to grow this account by 20% every month. Okay. So you need to be able to dictate what particular type of trading that you are going to use. All right. So if you're a person who's busy the whole day, for example, you're busy at work, you're busy with multiple jobs, or you don't really have much time in trading forex, then you need to be able to trade on swing entries or intraday entries. All right. So basically, what you need to set yourself up is you need to identify the time frames at which your particular trading style will be suitable for you. So you need to adapt your trading style based on the time that you have for trading. All right. So you don't try to scalp when you don't have time to actually monitor the market. All right. So these are the time frames that I use. So if you're going for a swing setup, then you go for a setup in daily, weekly, and monthly. When I talk about setups, I'm talking about re-entries. All right. So when you go for daily re-entries, then obviously this re-entries is the type of re-entries you can hold for days or weeks. Okay. So when you go for intraday, then these are the type of trades that you can hold for maybe 2 to 3 days or a week. And when you go for scalping, these are the trades that you just hold for a few minutes or a few hours. So these are the things that you need to understand. And these are the particular time frame at which you should be entering the market. And these are the particular targets that you should be aiming to get. So those are the particular pips that you're aiming to get. All right. So when you understand and when you have decided what particular type of trader you are, then you are be able to do this. All right. So over here, let's just say that you define what trader you are, and then now you need to define what type of trading style you're going to do. So if you're a person that has a lot of time, then you can go for scalping. Let's just say that we're going to go for intraday. So maybe I have time in the morning during breakfast, I have time at lunch, and maybe in the afternoon I have few hours, and maybe at night I have few hours. So there's a particular normal daily routine of the average person. So intraday would be suitable for this particular type of trading. So when you have your trading style that you're going to go to, then you need to identify the time frames that you're going to go into. So you need to find re-entries at this particular time frame. And then you need to set your trading strategy. All right. So based on this strategy, let's just say that, I want to aim 20% on a monthly target. So this 20% of $100, that's 20 USD. All right. So do not try to earn $20 over a period of one day. That's insane. You're just pressuring yourself. So in a month, there's 20 days worth of trading days. So that gives you exactly $1 per day for you to achieve this 20% monthly target. So if you divide this to a much more achievable goal on a daily basis and on a weekly basis, then that's more achievable in terms of trying to achieve your target. Okay, so let's just say that every day I want to trade 1 cent, and I'm gonna aim for 20 pips. So 20 pips will give you about $2, for example. So if I manage to earn $2 a day, and the minimum is $1 per day, so I'm gonna make about $40 in a month. So I will be able to grow my account at about $120, and I will also have $20 worth at the end of the month for me to withdraw. So that is some of the things that you really need to think about when it comes to trading. It's not just finding setups and just go entry. You just you are shooting without any particular plan. So you need to have some sort of plan, such as this simple plan that I have. Okay, as I said, last thing before I leave tonight, whatever technique you're using, regardless BBMA, regardless is Fibonacci or support resistance, all of these techniques are most of the times are telling the same thing. However, it depends on the person which particular technique is much more easier for them to adapt to. However, regardless how good your technique is, but if you don't have the discipline, your money management, either your strategy, your trading plans is not going to work. You're not going to be able to grow your account if you don't have any plans. So my last advice for tonight is, please, after this, I do want you to practice your BBMA knowledge, hone your skills in terms of the tree stuff. The most important things that you really need to understand is extreme, MLV, and re-entries. These are the things that you really, really, really need to fully understand the mechanics of it. However, this is just 10% of your trading success. So please, for this example, $100, and if you just practice this for, let's just say, a month or 3 months, just practice every entry. You're just going to use 1 cent, for example. The market does not move 1,000 pip over a period of 1 day. If you make a mistake on your entry, this 1 cent you will not lose your $100 over a period of 1 day. That is just impossible. Okay? So if you follow the SOPs, if you do your market analysis, if major trend and current trend is also telling you the market is going down and you go for sell, then 90% of that you will be able to achieve your target. So that is just a really, really good way of identifying what particular market you're going into. All right. So I think that's it for tonight, and I hope that it is beneficial for you guys, and I hope that I was able to help you out with some of the stuff in BBMA. But if there's any more questions, there's a webinar chat group that we have open, so please just drop your questions over there, and if I have more time, I'll cover that in another session in the next few weeks, I guess. All right. So thank you and have a good night. Assalamualaikum. So for those who have entered GU, just hold your position, man. Hope it's gonna be blue soon. All right. So that's your free signal for the night. And Assalamualaikum warahmatullahi wabarakatuh.